Hello everyone. So we are going to start a new series of discussion where we will be doing uh, the previous year question paper of the prelims from 2011 to 25 discussion. Okay, so let us start with the economics. So this is a PYQ based concept notes. Okay, so this PDF basically contains only those economics concepts which have been repeatedly asked. Okay, so these are the high yielding themes, okay, in UPSC prelims between 2011 and 2025. Each concept is explained in simple language with an exam oriented focus. Okay, so explanation in the simple language is what is essential for any aspirant, okay, who is preparing for the examination. Now let us see the first theme. So if you see the previous year question, you will find that the national income and the growth means GDP, is one of the most frequently employed theme in the UPSC prelims by UPSC. Okay, so under which there are certain things that you need to remember. Okay, such as GDP, gross domestic product. So what is GDP? So it is the value of all final goods and services produced within India in a in a year. Okay, so basically GDP is a monetary value of all final goods and services produced within territory of a country in a year. Example, a car produced in India by a foreign company is part of India's GDP. Okay, so it does not matter whether the car or anything is produced within a country is by the resident of that country or the foreign. Okay, what matters that where it is produced. Okay, now GDP. So GDP is basically GDP plus income earned by Indians abroad minus income earned by the foreigners in India. Okay. So gross national product. What is gross national product? When you deduct deduct the income which is earned by foreigners in India from the GDP and add the income of the Indians who are living abroad, then what you will get is the GNP. Okay, now there is a nominal GDP. So GDP calculated at current prices. Okay, when you calculate GDP at current prices, then it is called the nominal GDP. It is called nominal GDP. Then there is a something called real GDP. So when GDP is adjusted for inflation, shows real economic growth. Okay, for example, in case of India, real GDP is calculated at the base year, okay, which is 2011 to 12. Now there is a something called GDP deflator. So it measures a measure of inflation based on total output of the economy. Okay, now per capita income. So national, when you divide the national income by population, total population of a country, then we get the per capita income. Okay, so these are the basic things that you need to remember. Okay, and if you see the prelims examination, UPSC is not asking the definition as such, but they're asking the application of all these definitions. Okay, so what you need to do, you need to do two things. First, you should remember the basic concepts, basic understanding of all these terminologies, and second, you should also be able to apply all of them interconnectedly. Okay, that is important. So interconnection you need to do. Okay, now if you see the previous year questions again, then you will find another major theme, which is the inflation as and price indices. Okay, so let us see the. So you have to remember few terms here also. First is the inflation. So what is inflation? It is the persistent rise in the general price level. Okay, then you have CPI, Consumer Price Index. So it measures inflation from the consumer's point of view, used by RBI. Okay, then you have Wholesale Price Index. It measures price changes at wholesale level, excludes services. Okay, so it basically does not take into account services. Okay, Wholesale Price Index. It is for the goods. Okay, now core inflation. So inflation exclude food and fuel. Okay, so core inflation is basically that particular, that kind of inflation where we don't measure the food and fuel while calculating the inflation. Okay, now deflation. So sustained fall in general price level. Okay, Then if we move further, then we will find that the another theme is the money banking and RBI, which means central bank. Okay, now what is monetary policy? So RBI control of money supply and credit. So basically monetary policy is that policy under which RBI controls the supply of money and credit in the economy. Okay, now there are certain quantitative and qualitative measures, okay, of the monetary policy which we need to understand. Okay, so these are the qualitative method. Okay, qualitative means that sorry, quantitative measures means those measures whereby you can either increase the supply of money or you can decrease the supply of money. Okay, so there is a first repo rate. So what is this repo rate? So repo rate is basically the rate at which RBI lends to the bank. Okay, RBI provides money to the bank. Okay, so lending of the money by the RBI to the bank uh, at the rate that is called the uh, repo rate. Okay, so repo rate, it is basically when repo rate increases, then what happens that the supply of money gets reduced. Okay, then you have reverse repo rate, so rate at which RBI borrows from bank. Okay, so when RBI is going to take money from bank, then it is called the reverse repo rate. Okay, now there is a something called CRR, cash reserve ratio. So when you have portion of bank deposits kept with RBI, okay, so CRR, cash reserve ratio, when you are deposit you are deposit certain portion of your bank amount with RBI, then it is called CRR. Now then statutory SLR, uh, a statutory liquidity ratio, so portion of deposits kept in liquid assets means cash, gold, okay, etc. SDR, okay. Then you have open market operation, when RBI buying or selling government securities simultaneously. Okay, then it is called open market operation. Now there is a something called money supply. Now what is this money supply? So you have M1 and M3. M1 means cash plus demand deposits. Okay, in the economy. So whatever cash and the demand deposit is there in the economy, combining both of them is what is called the M1. Then M3, M1 plus time deposit. Okay. Now, if we go further, then we will find that the third major theme is the fiscal policy and deficit, from where questions have been coming. And in last year 2025, there were I think two or three questions from this particular theme. Okay, so we have fiscal policy. Now what is this fiscal policy? So fiscal policy is that policy where we talk about the government taxation and spending decisions. Okay, how government is taxing people, what kind of taxes are there in the economy, and how government is actually spending all of them. Okay, then you have fiscal deficit. What is fiscal deficit? So total expenditure minus total receipts excluding borrowings. Okay, so when you are excluding the borrowing and then minus doing minus of total expenditure minus total receipt, then it is called fiscal deficit. Total expenditure minus total receipts. Then you have primary deficit. So primary deficit means this fiscal deficit minus interest payment. Okay, so fiscal deficit minus interest payment. Then you have revenue deficit. Sorry, revenue expenditure does not create assets. So revenue expenditure and capital expenditure, we have to remember these two. So capital expenditure creates long-term assets. Okay, so basically here we have to see it once again, because we tend to not remember these things. Okay, in one go. Okay, so let me bring another pen so that we can understand very well. So fiscal policy, the when we are doing the study of government taxation and spending decision, it will fall under fiscal policy. Okay, then you have fiscal deficit. So total expenditure minus total receipts. Then you have primary deficit. So primary deficit means fiscal deficit minus interest payments. Fiscal deficit minus interest payment. Then you have revenue expenditure. It does not create assets. And then you have capital expenditure creates long-term assets. Now, another major theme is the external sector. So, external sector, let us look at this. So, this is one of the most important sectors from where questions are frequently coming in nowadays. So, first thing is the balance of payments. So, balance of payments basically it record the all the international transaction uh, of a country. Okay, so in a simple words, that balance of payments is kind of record of country. Let's say in our case, India, the international transaction that India is doing with the rest of the world. Okay, so that is what is called the balance of payments. Now, current account deficit (CAD). So imports greater than the exports and transfer. Okay, so when your import is greater than exports, okay, then it is called current account deficit. Okay, so your import, for example, in the case of India, import of India is always greater than the export and the transfers. Okay, it means that India is not able to export more because of the thing that its industries are not so much capable of the competition with the world. Okay, and also there are other structural problems in India. Okay, infrastructure problem is also there, and but India is that is why India uh, uh, does more of imports than the exports. Okay, then there is something called exchange rate. So what is exchange rate? So value of one currency in terms of another, it is called exchange rate. Then depreciation, so market driven fall in the currency value. And then devaluation, so government driven fall in the currency value is what is called devaluation. Now another major theme is agriculture and food economics. Okay, now the let us see then we have MSP, minimum price guaranteed to farmers. It is basically extended by the government. Okay, then buffer stock, food grain stock for emergencies. Then we have PDS, public distribution service, so distribution of subsidized food grains. Then we have financial markets, so bonds or G6. Okay, bonds or G6, so it is basically debt instrument used to raise funds. Then NBFC, non-banking financial institution, and financial institution like banks, but without banking functions. Then we have payment banks, banks with limited services, no lending. Okay, then we have CBDC, digital currency issued by RBI. Okay, I think now these things are clear. Okay, so these are the basic things of the economics, and it is very important that we all have to keep all these things in mind in order to clear any of the UPSC or state level examination where economics questions from economics are asked. So thank you very much. Similar kind of uh, videos we will be keep on bringing. So for that you can subscribe to our channel. Thank you.